It takes credit to get credit. When I got to the American Fintech Council, one of the most welcoming arms and teams was that at Self Financial. I had the opportunity, by the way, in a full suit and tie, to travel to Texas. I got to the office soaking wet, and got a chance to meet with the team at Self. And Julie Szudarek and the amazing team have done an amazing job and been an amazing collaborator. I'm really excited to bring Julie and Mike on up to present.
My name is Mike Croxson. I am the CEO of the National Foundation for Credit Counseling.
Oh my goodness. West River, Rapid City.
No kidding. With consumers and their creditors for 70 years. So when a consumer gets into trouble paying their creditors back, we work with them to find a way to solve that problem. And Julie, you're here from Self.
I'm here from Self. I am the CEO of Self. We are a fintech platform that helps consumers access and build credit, and these consumers are often kind of underserved who might have been ignored by the financial mainstream.
Great, thanks. And picking up on the Senator's comments.
By the way, I'm completely paranoid about cybersecurity now.
That's right.
Maybe I need to be making a call.
So I remember about 10 or 15, 12 years ago, sitting in a dark track session somewhere in Vegas probably about emerging products for consumers. And I heard this guy named James Garvey, who was an entrepreneur who had launched a new company called Self. And the idea was not new, it was a secured loan. But the idea was to offer it broadly to consumers using technology. It was unheard of. And it was one of those where he had been through a personal situation, decided he needed to do something about it, and like any good entrepreneur, got this business up and running. And like any good entrepreneur who wants to survive, figures out it's time for me to find somebody to take it to the next stage. And pulling that off frequently means finding partners who can actually help you reach more people, do more stuff. So, Julie, give us some background on Self and how you got to where you are now and where you find yourself at this moment when you're trying to lead things.
Sure. So I took over from James Garvey, our founder, about a year ago. He ran the company for quite some time. He did an amazing job building a really robust company that really had consumers at the forefront and in their day-to-day thought process of how we deal with customers. I came in to help continue to expand the product set that we offer to customers because we have consumers that love what we do. We really help customers on their credit journey, and they would do credit building with us, and I'm sure we'll get into in a minute what that is and what it looks like. They would finish that process, and then we would say, okay, see you later. So we are looking to expand products that we offer to these customers and continue to help them really be part of that financial mainstream.
So back to this notion that it takes credit to build credit, right? So the consumer who finds himself either with a thin file, no file, impaired credit, whatever, how do they find you?
We're present in digital channels, Google, Facebook, TikTok, etc. We also have an incredible word of mouth. So like 25% of our customers find us via word of mouth, which is amazing and helps with marketing cost and helps kind of really prove the trust that customers have in our product. And if you think about where we started and why we exist, so we have different types of customers. So we have builders, which are people that would be thin file, no file. It might be a recent college grad. It might be someone who's come to the U.S. on an H-1B visa and they're going to have some high-tech job. We love these customers. I mean, they are perfect for a product like ours. They come and build credit. So how our product works is you take out essentially a CD secured loan, and every single month as a customer you pay whatever amount you've decided which plan you're on to that loan. We report that to the three credit bureaus, and that shows positive payment history, which is one of the most critical parts of someone's credit score. So these builders, they're great. They're generally like they have income, and this is kind of sort of an easy process for them that just gets them to a place where they can go get a credit card, go get a loan, whatever it might be. Then we have credit rebuilders, and this class of our customers falls into two groups. There are people who are they're just chronically stuck in this cycle. And they've been, life has not been easy, and they're not a one-size-fits-all kind of product. So sometimes the core product that I talked about is perfect for those customers. They can put money into an account every month and build credit. Sometimes it's not perfect because they don't actually have like $25 a month to be putting into this kind of account because they're in that bad of shape. And so for those customers, I think it's really important to understand what it is that they need and how we can meet those needs for the particular customers. And so sometimes that might be something like we have a rent and bill reporting service. And so putting customers into a service like that where we're not making them put money into an account, but we are letting them get credit for bills that they're already paying, for expenses that they already have every single month. And so that might be good for them. We also have customers that are sort of get into an acute situation. And so, something like 80% of the subprime population, and so 80% of our customer base, they're like one event away from just financial disaster. And so it might be a medical event, it might be a car accident, something happened at their kid's school that they need to pay for. And so those customers sometimes go into like a temporary credit issue. And these are great customers to help as well. They need some education. They typically normally will have funds that they can pay for things like credit building and are not like necessarily right on financial ruin. And those customers we can bring into the fold, help them with education, help them understanding why credit's important. Like credit is such a stigmatized thing in like our country. It's not taught in schools. People don't understand the components of what makes up your credit. Utilization, available credit, and people just don't know how these things play into their day-to-day. And so like educating people on that and having products that help them along kind of the journey that they're trying to build is something that we found to be quite critical.
That's great. Can you talk a little bit about this sort of notion of alternative underwriting and the data that you capture and the utility of it perhaps for other people in this room? What are you learning of? Who is this customer? You've described them somewhat, but who is this customer and how do you take them to the next product in the marketplace?
Sure. So does anyone play a New York Times game called Connections? So yesterday I was in my Uber you should play it if you don't play it, it's very fun. I was in my Uber to the airport and I was doing Connections. And one of the things ended up being monthly bills. And it was utilities, rent, phone, and internet. And I said, this is a sign because I'm coming to talk about alternative data tomorrow at this conference. I'm like, the Lord is speaking to me today. So we think that alternative data is super important in credit building. The reason for this. So today, I own my house, I pay a mortgage. When I pay that mortgage on time, I get a plus from the credit bureaus. Good job, Julie, you did that. Now, the mainstream population that our company deals with, most of them are renters. And rent data, guess what? It's only included if you don't pay your rent. So paying your rent, who cares? Not paying your rent becomes like demerit that comes through your landlord or whoever, and it hurts your credit. So we are firm believers that some of these bills that are really important, are really big parts of people's, 30, 40% of people's income is going to rent. Like, why shouldn't they get credit for that if, like, Julie, the 5% or whatever, is getting credit for the mortgage? And so that's data that's important. We think bills data is important because you're paying that, and the ability to pay that and do that on time is an important criteria to, we think should be an important criteria to sort of looking at the credit worthiness of the particular individual that you're talking about. However, it is not in, I think that it's been hard to get some of this data sort of mainstream. And I think one of the reasons has been that it's been looked at in really broad swaths. And you're kind of like, okay, here's this data for the subprime population. Well, actually, it needs to be de-averaged and de-averaged and de-averaged again. And so that you can start to really see micro segments that exist within these kind of very large 100 million person segments that we're talking about. And I think I'm really excited about, the senator just talked about AI, and of course that's an important part of our business, but sort of the the capacity to do more like data digging and looking at data in really detailed ways that I think will really start to help getting some of this kind of alternative data more mainstream, because I think we'll be able to identify both ahead of time and after, an event, like whether this data was worthy or not. And the whole thing is making sure that the data that we're providing and that we're talking about for customers is actually indicative of a behavior that a customer is or is not going to have. Like that's when the data becomes valuable. Like just having the data and saying like, yeah, it's good data and it's interesting doesn't really matter if it doesn't prove or predict a behavior.
So no matter anybody who's had an innovative product in the financial services world, particularly if you're talking about subprime, no matter how great it is, someone's going to find a way to make it a bad thing. So let's talk about the good things. Talk to us a little bit about what really, really makes for a fantastic credit building product.
Okay, so there's a bunch of criteria that I think are really important here. One is accessible. So this product that we have, I think existed, like before James brought it sort of digitally, our founder James brought it digitally, it existed in credit unions. It was something that it's been around forever. But there's always this stigma of like going into a physical place and having to get access to something like this. It's embarrassing. And like that's the worst thing ever, is that someone's embarrassed to go fix a big problem that they have that's actually like stopping them from being able to advance in their life. And so I think accessibility is super important for this product. So the fact that we have this product digitally, we're trying to make it mainstream. We're trying to destigmatize it. And I think that's one really important criteria. And that's also in terms of like the pricing. So we have different payment plans, depending on how much you have to invest in this. And I think, so that's a nice thing. Two, it has to be educational so that our consumers and consumers of any credit building products understand what it is that they need to do to be successful with the product. And what comes from that is how we help with that is through education. So we actually need to change habits. Again, back to the data. If you're just, oh, good, this person did this thing, but it's not indicative of having a human that comes out of this process as a better credit risk to someone who's looking to grant credit, then it's not super, it's not super valuable. So it needs to be habit forming. Customers need to understand why it works and what actions they take to make it work for them. And then it needs to be something that's long lasting and kind of like, I don't know, a credit building is a lot like losing weight, I think. It needs to be something when you're almost about to, eat something you shouldn't eat. They say you shouldn't ever say things you shouldn't eat. You should eat everything just in moderation. But if your credit's about to go off, how do you get it back on track? And how do you quickly identify like, hey, this is about to happen? So how do we as an industry do things with consumers where, by the way, you're about to hit this utilization point on your credit card where things get bad for you? You know that you're doing this. And if you know you're doing this, great. And you have to do it anyway because you have an emergency, great. You're taking that risk. You understand what it could do. But like really providing customers with kind of guided journeys that help them understand when these issues might take place.
From the growth perspective, how do you see the next 3 to 5 years unfolding? I mean, do you do this on your own? Do you partner with other financial services companies? Do you have some stories about successes that you're going to be able to leverage for the future of Self to make this that sort of ubiquitous product that consumers think about?
Yeah, I mean, we will continue. We partner with a lot of people, and I'll talk about that in a second. But continuing to build on the momentum that we have with this customer base. As a company, we have like real empathy for the consumer, and like those of us in this room are probably not the consumers that I'm talking about today. And so like really taking that empathy where we understand the situation that consumers were in and finding solutions that really deal with like, they're at the bottom of Maslow's hierarchy here. And like, how do you find solutions that help those consumers? So we're interested in continuing to provide products, expanded sets of products to customers that will help them, really work their way into the financial mainstream. And I think the more that we can do like on us so on our platform, the more we can really help customers and guide customers to outcomes, to decisions, to trade-offs and the such that is most beneficial to them. And how we get there, like we have many partners today. We probably work with some of you in this room, and we think we have great products. And so if we can find partners that can help us, access even more audience than we can, get ourselves today, because we can't target every single customer, but some of you have, customer segments that you can target differently than we can. That's, the kind of partners that we like to work with.
So given that most of the folks in this room probably don't represent your customers, how do you think you find that invisible consumer who never thought a product like this was right for them, who didn't think they would ever need this, that thought they were going to work forever, they weren't ever interested in building credit, they just thought they were going to live paycheck to paycheck? How do you, what's the breakthrough opportunity there?
I think the breakthrough opportunity is, meeting these customers where they're at. And there's lots of approaches to that. We have a partnership with Regions Bank where they provide some of our products in their physical branches. So we're never gonna be a physical branch company, like we just won't. But if we can partner with people like Regions who have customers that are in the segment that we're targeting, and they perhaps get the less digitally native customer there, that's an example of a great product. I've been in digital businesses, although this is my first fintech, since the beginning of the internet almost. And we go to many different channels than I've used in previous businesses, because we know we need to meet customers where they're at and talk to them in a language that they understand. So we do a tremendous amount of TikTok. We just sponsored something with iHeartRadio, and I'm going to forget the guy's name, but he's a famous DJ on iHeartRadio. And it fits with our customer segment. We have a partnership with the San Antonio Spurs, and the beauty of that partnership is they're a very like-minded organization. Go read about how they draft their players. I mean, there's a whole cultural approach that they take to the players, and they want certain types of players that are good human beings. And so that's been a really interesting and valuable partnership for us to have.
So you're nearing the end of your first year. Honeymoon's over.
It is over.
It's over. So if the people in this room came back in 3 years, what's going to be different?
If you think about sort of North Star visions and where we want to be, we at Self, and hopefully everyone in this room, but specifically because it's my job, would like to see the number of people that cannot access credit significantly reduced. And that would come through, we're not going to solve world hunger. I'm not going to solve the fact that people don't have money. But if I can help people build better and safer and smarter ways around using credit, I think that's an incredible win. And I think that it's generational. Once you start forming good habits in families, that's something that gets passed down to the kids. And so if we can just continue building that, I think that'll be an amazing success.
We're in Washington. We have a new administration coming in. We've got a new opportunity with Congress to maybe move things along in a different way than recently. Any wishes that you would put out there for Phil and his team to be thinking about?
Yeah, I mean, we've loved our partnership with Phil and his team, and I think I read the stuff that Phil puts together, and I'm like, yes, that is right on. And so I think a lot of the stuff that is coming out from this organization is amazing and should be incredibly helpful to all of us in this room. And I guess I'd say just what I said, the people in the government, people in this room, we are not this 100 million underserved population. And so I would say, let's find ways to really, truly put yourselves in the shoes of the people that we're talking about. And from a regulatory perspective, let's not make rules that seem like they make sense to us because we, live a privileged life. Let's find rules, regulations, et cetera, that can benefit, the mainstream population that we're talking about here right now.
Is there anything going on in the credit cycle right now that would lead you to believe that there's more opportunity in kind of traditional banking customers for a product like Self?
I think that the access, many customers like go to the big branch banks and are just rejected wholesale from products, be it savings accounts, whatever. And I think fintechs and Self, in particular, we want to serve these customers. We've found cost-effective ways to serve these customers that maybe some of the bigger banks, and sorry if any of you are in the room, that the bigger banks sometimes don't want to or can't. And that's fine. Like there's a lot of customers out there. There's a lot of people that need access to financial services. I think something like 90% of the population still banks and does most of their financial work with big banks. So there is like huge opportunities for fintechs that can do things more efficiently and target customers in a different way that's out there. So I'm really, really excited about that. And as we sort of continue this digital transformation of the financial services sector, there's tons of opportunity.
One thing that we see frequently with consumers is they hit that utilization, or they begin to run into the lack of access to more credit to maintain their life without dealing with kind of core issues, that kind of educational, budgetary, cash flow side of things. That does not seem to be slowing down. Is there, you think, penetration opportunity there to work with credit grantors to say that there's some kind of a hybrid product that y'all might be able to offer?
Yeah, like we work with, I'm sure there's opportunity for that. Like today we work with banks, with sponsor banks, and we do many of those things with those banks today. So, the banks have a lot of interesting like products to work with. I think there's the senator was talking about CFID. I still am getting, as a newbie to this sector, that's right? I think there's lots of opportunities with banks there and sort of partnering on that side of things to use those funds and allow, fintechs who might be, have an easier time with innovation because of new systems and everything else to really partner on stuff like that.
Well, hearing the senator talk about CDFI before, one of the things
I got it wrong.
It's okay. Was that is that many of those small business owners have used personal credit to leverage their business, and they don't know what they're doing on either side completely.
Right.
And so that ongoing education is an opportunity to solve a bigger problem. That small business piece is really, really a driver for a lot of consumers that we see that struggle. So
yeah,
finding alternative data on that kind of quasi-consumer business side may be another area of opportunity.
Yeah.
So, great. So, last question. When you hand the reins over next, when you're ready to move on to what's next, where do you think the fintech world will be, a decade from now in terms of the kinds of breakthrough? For example, the consumers that you deal with, their lives change very, very quickly because of this tool that didn't exist before. Does that keep happening? Does something different happen there?
I mean, I think it keeps happening. There's always going to be people with the need for these types of products. And so I hope that people have more access to these products. I hope that people are less embarrassed about having to use these products because, people have to get out of these debt cycles that they get into. And like products like us can help them do that. And if we can just continue to remove the stigma, I think that's huge and has benefits just beyond Self or any fintech or any of us in this room, just to like the society at large.
Well, you've got a big chore in front of you. Thank you very much. It's been great to hear you.
Thank you.